Hello, everyone, and welcome to another real estate market analysis for San Jose, California for September of 2023. We are now well into the final stretch for the year of 2023, and so these numbers are going to be particularly interesting. Unfortunately, some of my predictions have not come true. I expected some changes that have not come to pass. I'm going to blame mostly interest rates for that in a lot of ways, which is probably not going to cover me completely. But anyway, let's just go ahead and jump in, talk about these numbers, and see where we are in San Jose. All right, now to begin with, we talk about active listings. This is the total number of homes that were on the market in San Jose, California. So for those of you who are in the buyer's seat, this is the selection you had to choose from. How many homes were out there in the market in San Jose for you to choose from? If you were a seller, this is your competition. So did we see an increase in that or a decrease? Well, from the same time last year, we actually saw a 39% decrease in the total inventory. Nothing very shocking here. In fact, if we look back over previous months, we can see we've been steadily increasing in inventory since December, which is a little surprising. We normally would have expected during the peak months of, May, June, July, a subtle decrease in these numbers as more folks come out and buy during that buying season. But what we saw was that homes that came on the market that were best in class sold almost immediately. Others started to accumulate. So we had a net accumulation, really, aside from July and August, where we had one fewer home on the market than we did in July. Really kind of shocking numbers. And keep in mind, what this chart here is showing you is a look back over our shoulders going all the way back to June of 2022 in terms of what's been happening with inventory numbers in San Jose. But we're also on the far right-hand side comparing the month of September to the same month last year. So you can see we've got 942 homes on the market in September of 2022. That's marked out as red, as shown here, just so that you can see it side by side. So it's a way to sort of get an immediate year-over-year change idea graphically, but then also to let you see at the same time what's been happening as we've been moving through the year. Overall, relatively flat. I mean, look at the volatility we saw at the end of 2022 relating to active listings, where we had that dramatic decrease after July of 2022. And remember, March is when interest rates started their increase, and they really, I think, kind of hit that peak towards the end of 2022. So these numbers are very reasonable given that reality that the inventory would drop. Sellers don't want to also become buyers in a market where no matter where they buy, their interest rates are going to be ridiculously high, particularly if you're a homeowner who either owns your home outright already, which is almost also an argument for that's when you should sell, because then you can use the cash that you pull out from that sale to purchase for all cash in a different location. Although not true in here in California, right? There's an awful lot of price challenges that we're going to talk about here in a minute that make it difficult. So the only person that would work for would be someone who's moving to a market where prices are lower. And then, of course, if you do have a loan that's probably at 2.5%, 3%, why would you want to give that up in favor of a 7+% interest rate on a mortgage? Probably not something that you'd feel good about. We've got 1.3 months of inventory. A normal, healthy market is right in that 4.5 to 5.5 month range in terms of what expectations are for a balanced market. What's interesting here is it's that competition between supply and demand. So this is the supply, right? And the demand is going to be what homes sold. So let's move forward. So now let's go ahead and take a look at new listings for September of 2023. We can see a pretty steady performance here. As we moved through September, we actually had a 2% decrease from the same time last year, which really indicates on the part of listers, folks selling their home, very little change from the same time last year, which I think is interesting given the change we saw in overall inventory. As we look at this, we had it sort of peak, if you want to call it a peak, in May. And that would be normal given that we would be expecting the selling season to start in May and June here in our local markets in San Jose. So if there was going to be a peak, that's when it would have been. It's just surprising the peak is not bigger. Relatively lackluster participation after that, dropped down to 645 in June, then down to 586 in July. And then for whatever reason, it jumped back up in August to 681 and then back down to 627 in September. Overall, these are not surprising numbers for me in terms of sellers wanting to jump into the marketplace. I'm actually, given how interest rates have performed over the last few months, I'm surprised we haven't seen more of a decrease in the total number of homes that get put onto the market. Because remember, if you're a seller, you're going to be a buyer. And if you're going to want to finance something, interest rates as they are right now are very challenging. Next, what's the total number of homes sold for September in San Jose? If we look at our data here, we can see that we're down 31% from the same time last year. That's a net total of 188 homes added to the inventory when you take into the number of homes listed, right? So if we look at the total number of homes listed, we can see that was 627. So in San Jose, we sold 439. So we didn't sell what we listed. So we added to the marketplace. Now, this represents a 31% drop from the same time last year. Last year, we sold 637 homes in September. This year, we sold 439. We peaked in sales in July of this year at 670. That makes sense. If you were going to see big increases in the total number of homes sold, it was going to be in May, June, July. And remember that those July sold homes actually got accepted offers in the month or month and a half prior. So these would have been contracts that were accepted by sellers in May and June that are simply closing escrow in July. There were some interesting extensions to the length of escrows as buyers had to negotiate financing and in some cases had prolonged escrows to account for different things relating to complications with financing. We did end up with a pretty big increase. Then a big drop off in August down to 523 with a continuing drop off in September to 439. If we look at the same time last year, we can see between August and September of last year, we actually had an increase, which I think is interesting. And then in October, a decrease, and then the usual wintertime drop. And that is what we would expect. Last year's September was kind of interesting, but we are seeing a complete reversal of that this year. And to be honest, what we've seen this year, I think, is typical of a market where we tend to see things, we get our peak, and then we tend to see it drop off and continue to drop off all the way through to the end of the year until January of the next year. And then usually in February of a year, we'll start to see that market turning around as the activity level increases. What do we think is going to happen with sold homes moving forward? My guess would be that we'll see a continuing decrease in the total number of homes sold for San Jose. Time will tell. My crystal ball gazing is less enthusiastic now since I have been expecting several numbers to drop that haven't. And we're going to go ahead and start looking at those next. So pending sales. This represents the number of homes that went pending or contingent in the month of September. So they accepted an offer. That's what we're talking about. And it's a way to anticipate how many homes we're going to see sold in the following month. And it's down 12% from the same time last year, but it's also down from August. So again, expectations for next month, because remember, this is a number that predicts the future of sold homes, is going to be down. If we take a look at what happened last year between August and September, another big drop in terms of the total number of pending sales, with that number continuing to drop right into December with a slight uptick in January of 2023. If we take a look at this, at the sold pending comparison, we can see that the solds and pendings are very much neck and neck here from July, August, and September. So there's no real deviations here. We had what's interesting is we had an increase between July and August, but then we didn't get that increase in September. So a lot of deals didn't go through or didn't close yet. So some of those may contribute to additional closes in October. But given the amount of drop we saw in pendings of really 100 homes, my guess is that's not going to be enough to actually give us a boost in the total number of homes sold in October. Next, overall average original list price. Now, I like this one. Every once in a while, I get some criticism that this isn't really a great number to look at, but what I'm trying to calibrate you to with this data is what expectations are on the part of sellers. So if you listed your home, this on average is what the number was before you even put it onto the MLS. So when you sat down in a living room with a real estate agent and you signed that listing agreement where we spelled out, this is what we're going to list your home for on the MLS on the very first day, as we click that button and it goes out to the world and everybody in the MLS and Zillow and Trulia and everything else and Realtor.com, as all of those sites light up with your listing, this is the price that they showed. So this gives us a good insight into what the expectations are on the part of sellers. How much more do I feel like my home is worth today than it was a year ago? Now, the good news is, on average in San Jose, homes were listing for about 0.5% below what they were a year ago. And I think with the current market, that makes a whole lot of sense. It's very much a deviation from what we've seen in past months, where in many cases, sellers were calibrated to double-digit appreciation in their property compared to last year. Now, we're going to see a bit of a dichotomy here as we look at what the actual sales prices were, but this, I think, is a good mental space to be in for sellers, okay? Now, what are the numbers? In terms of September 2023, expectations on average were $1,406,286. Last year, that number was $1,413,631. And this number has been relatively flat for quite a while. We saw that it peaked last year in August, so a year ago, plus a month, but it's been relatively flat. We've had some trends that would have indicated if we were looking at numbers in January and looking back, the overall trend was lower. But then we saw things increase in February. And then February and March were kind of peak months with relatively flat performance. Notice that despite supply and demand influences on prices in terms of the psychology, remember, this isn't what things sold for. This is expectations. People weren't expecting a whole lot more. If we look at May of 2023 and May of we can't look at May of last year. That's cut off. Excuse me. But on a month-to-month basis, these expectations did not show a lot of increase in terms of what sellers were expecting. Now, let's compare that to what homes actually sold for. There's a couple of different things here. The county is different from San Jose, which is different from Morgan Hill, which is different from Gilroy. But what's interesting here is we had a 13.2% increase in the average sales price. So while seller expectations were 0.5% below expectations last year, the actual results were 13.2% over what asking prices were, for a grand total of $1,490,140 as the average sales price, compared to last year's $1,315,847. So what did that equal in terms of cash money in sellers' pockets? Well, on average, that meant that sellers were making $83,854 more this year than they were last year. So that's or more than the what their expectations were. So their expectations were $1,406,286, and what they actually got was $83,854 over that. So this isn't compared to last year. This is expectations for the month versus reality for the month. And expectations were below what reality ended up delivering, which is great news for sellers in September. But a little odd, because my expectation would have been that this number by now would have gone down, and it hasn't. In terms of trends, where do I see sales prices going? Well, if we look at September of last year, we can see that the overall trend as we headed further into the year was a decline. We saw a little bit of an uptick in October, but it did tend to go down as we headed into the rest of the year and in the first couple of months of 2023. My expectation would be similar numbers now, given what we have as far as influences relating to interest rates and market conditions. I would expect prices to continue to drop. There's also concerns about recession, so there's very big economic influences that could potentially hit this. And I think all of that's going to sort of come together to drop sales prices a bit more. If we look at, if we look at percent of list price, this one is a shocker. This is probably the one that throws me off the most. This is the one that I absolutely did not call. I expected that by this month, we would be seeing this number being below 100%, that homes would not be selling for asking price. But check it out. We have been above asking price since February and have not dropped below 100%. So in terms of my crystal ball, it needs cleaning, because it was obviously wrong. We have a net 5.1% increase from the same time last year. Last year, we were seeing homes selling for 100.2% of asking price. Today, 105.3% of asking price. That's absolutely nuts. It tells us a lot of things about the market. It tells us the average offer is a multiple offer situation, meaning that more than one person is bidding on a house when they sell. Now, one dynamic that I thought was feeding this early on was as new homes came on the market that were best in class homes, those were going to get multiple offers, right? And because that's a trend that I'm seeing. When you get an example of a house that's been super well maintained, it's been remodeled, it is beautifully set up, those homes are going to get multiple offers. But we saw this happening much more broadly, and particularly in the market here in Morgan Hill and some homes I've been tracking in San Jose, where I would have thought they were going to go for under asking price. And there's one standout for me that actually just closed a couple of weeks ago that I thought there was no way this thing was going to sell for asking price. But and even after a $100,000 price drop, it ended up selling for over asking price. So a little bit of a shocker. Maybe we'll talk about that in the coffee and real estate session for October. But also keep in mind that that's when we cover the county numbers. So join me for the live event on the third Saturday of the month. You can check my website, soldbyrobert.com. We're right there on the front page. Just scroll down a little bit. You'll see the date and everything for when that event is. And I love for you to participate. It's live, so you can ask questions. It's a give and take. I present all of the data for Santa Clara County and compare it to San Jose, Morgan Hill, and Gilroy. So it's an opportunity to sort of see 10,000 foot view, the 5,000 foot view of San Jose, since the data is so big in that city, and then smaller 1,000 foot views of Morgan Hill and Gilroy, just to get an idea of sort of how the market changes as you get into smaller communities. Okay. Next, days on market. Interestingly stable, actually, since really April, May. Last year, we were at 27 days to get a home sold in San Jose. That's down 37%, where it's only taking 17 days to get a home sold in September of 2023. Exact same number from August, so no change. Market has remained stable in terms of how long sellers are having to wait before they get that offer that sounds good to them. What do we expect in terms of where this is going to go? I would expect it to go up. This is the time of year when we should expect it to go up. As it starts to rain, as the weather gets colder, we tend to see fewer buyers coming out. But supply and demand is so low right now that I can't help but think that a lot of these buyers are going to be diehard buyers and potentially staying in the market during the wintertime. The flip side of that is sellers who don't want folks trampling mud through the house during the rainy season. But again, there are economic influences that I think might keep sellers in the market during the wintertime, whereas if it was more normal, they wouldn't. I think a lot of sellers are potentially thinking of this as their last opportunity to get the best price for their home for a while, particularly if the professionals who are predicting a recession growing over the next 12 months are correct, and we start to see that impacting the market even more. You can check my podcast for other updates. I've been kind of keeping an eye on general credit issues relating to the general population, particularly as it relates to subprime auto loans, which have been crazy, that are likely to be able to push that financial domino over and force more of a recession for everyone in the economy, which could also affect housing. So we'll have to see how that goes too. So next, let's talk about price reductions. And I had to double check these numbers because it was an amazing switch for San Jose. Let's go ahead and take a look at these, because the change just from month to month is ridiculous, and the change from year to year is even bigger. Of course, if there's any updates to these numbers, I'll share them in the coffee and real estate live chat that I mentioned earlier. But for the month of September, this was only 5%. So only 5% of homes in San Jose had a price reduction in September of 2023. That's down from 24% in August of 2023. And year over year, it's down 91%. Now, that's the biggest drop. The county in general only had a 53% drop from the same time last year. So San Jose has somehow managed to completely break the bank. I'm going to double check it again, as I said, just before coffee and real estate to see if the numbers get updated in the MLS. One thing I have noticed is that as you move through the month, numbers get tweaked and updated in the MLS for creating data. This number all dates from October 2nd. But these are the numbers that I'm seeing. And I actually double checked these with today's number as of October 11th. This is an accurate number based on what the MLS is reporting. But it really shocks me. And I think it's very much reflected in the fact that we're seeing home selling above asking price, and all of these types of things that just show that in San Jose anyway, there hasn't really been a need to engage in a lot of price reductions. My guess would be that this number changes as we move through the year. But just as a comparison, 21% of homes in Santa Clara County overall saw price reductions, 23% in Morgan Hill, 29% in Gilroy. So there are clearly communities, very desirable communities. Morgan Hill is clearly a very desirable community where still numbers in the 20s are happening in terms of the number of homes that have to have a price reduction in order to get sold. But San Jose overall sure didn't see that in September. Okay, so that covers it. If you've got any questions, please feel free to reach out to me or observations of your own that you'd like to share. You can find me at soldbyrobert.com. If you're interested in buying, selling, or investing in real estate, I am a licensed real estate broker right here in Santa Clara County, ready to help you with whatever needs you might have. Been doing this for over 30 years, so I have got a lot of experience throughout the county to put to work just for you. Now, the goal is always to leave you with more knowledge on the table than I take up in your time. I sure hope we've accomplished that today. Thanks again for listening, and I will talk to you all next time.